Good afternoon, good evening, wherever you guys are tuning in from. We have Sumit Kovoor and Stephen Gesis here from Smartland, and they will be talking innovative ways to grow incremental NOI, the three most important letters in multifamily. Welcome, guys.
Hey, how are you? Good evening.
I'm going to kind of give you a brief about who Verivest is first before we jump into our presentation. So Verivest is a real estate investment platform designed to bring trust and transparency to middle market investing. Our mission is to create and enable the conditions to increase the speed of trust in the private middle market real estate investment space. And our goal is to help enable investors to direct capital to those trustworthy sponsors who can demonstrate that they are trustworthy stewards of capital. All right, so here we have the sponsor directory. You can search by a minimum investment type. The type of investment, you can see everyone's background checks on our platform. You can connect directly with a sponsor. You can see all their quarterly checks. So everything is laid out for you very transparently there. And then to be on our platform, you must have no personal or business bankruptcy petitions, no unfavorably resolved lawsuits, no regulatory sanctions in the past 7 years, no criminal convictions, and then sign the code of conduct. I want to introduce our guests. So we have Sumit Kovoor. He graduated from Miami University with honors, worked as an auditor and consulted in corporate America across asset management, private equity, and real estate. He's been working and investing in real estate since 2013, and he lives in Cleveland, Ohio. He also knows if you visit Cleveland, Ohio, the best places to grab a bite. So contact Sumit if you're ever in Cleveland area. And then we have Stephen Gesis. He graduated from the Ohio State University and then received an MBA from CSU Monte Ahuja. I probably butchered that, so correct me if I'm wrong. Ahuja, there we go. School of Business, and he is the co-founder of Smartland and lives in Highland Heights, Ohio with his wife and 3 boys. So without further ado, I will give you guys the floor and you guys can go ahead and take it away.
Awesome. Well, thank you for that introduction. One of the things that we're really proud about at Smartland is that verified Verivest gold standard. One of the things that we really pride ourselves on is being very investor centric. And we were one of the first movers to partner with Verivest in going through this higher level of transparency and making sure that there's a third party kind of checking our results, because in the private placement industry, it's really important to have these checks and balances. So we're really happy to be here to educate our investor community and also the Verivest investor community. So we'll go ahead and kind of discuss what we think are innovative drivers to add incremental income to your net operating income. So today I brought our resident expert, Steve Gesis, who is our Chief Operating Officer and really is such an innovator in terms of operational efficiencies. Steve, could you kind of dive into our history at Smartland and set up the audience with where we're going?
Yeah, thank you for that awesome segue. So expert in-house, I guess. Okay. So this evening, well, let's explore some of the Smartland history. So we were founded in 2008 in Cleveland, Ohio. We started in the single family residential space, and we built that out to an institutional grade product. And we've helped investors across the world build wealth. And so we take such pride and honor in that. It's just been such an exciting journey since we first began. And today, you know, being Verivest Gold, sitting in this webinar, just amazing that we can continue that kind of educational and worldly building wealth for folks. So we've evolved over the years to a completely vertically integrated company. So Smartland as a whole is an ecosystem, and our ecosystem consists of 5 separate divisions. And those 5 divisions specifically are our investment management team, our property management, the marketing, design, and construction. So those are our key core components that folks rely on us to make things happen. And so this year, we opened up a new headquarters in Florida. So we're proud to say that we're now based out of Miami, Florida, out of Brickell. So if you're visiting Brickell, please let us know. We'd love to grab a cup of coffee, eat some lunch, have a water. And then, so our expertise is truly in residential real estate, specifically institutional grade. And we also have a very heavy multifamily value add focus that we really encourage folks to take a look at and dive in with us.
Yes, Steve, thank you for that. So kind of tells you a little bit about Smartland as a whole and how we've evolved and grown through the years to bring everything in-house. We believe that being vertically integrated allows us a lot of efficiencies to drive results quicker. And what we're going to take you through is educate you on why we look at incremental income, so income outside of rent income, and why we believe you should always focus on growing your net operating income. So just a little agenda for the webinar. We want to keep this brief and pack in a lot of value. So we're going to kind of go through 3 simple examples of implementing this at your own multifamily, or how we do it as our Smartland process. So we started with like a beginner stage implementation of incremental income, a intermediate stage, and an advanced stage. And we're going to go into that a little bit further. But first, let's talk about why we care about net operating income as commercial real estate investors, and as a passive investor looking at a firm to invest in, why we think so critically about it. So commercial real estate is valued based on your net operating income. And net operating income is defined as your operating revenues minus your operating expenses. We try to really look at what are inefficiencies in that process to raise revenues and decrease expenses and overall increase the value of our property. So what is incremental income and the whole purpose of this webinar? Everyone understands what rental income is from a tenant paying their rent, but not everyone understands how to extract more value from your tenants and also add value to their standard of living through incremental income. So the definition of incremental income is operating income received from adding an amenity or something that generates income. Some of these examples that we're going to go through are laundry income at our beginner stage, pet income at our intermediate stage, and internet income at our advanced stage. So at different tiers, a beginner stage is very easy to implement, whereas the advanced stage is much more difficult. Some of these other examples, such as move-in fees, RUBS, which is billing residents for their utilities, some of the application fees, or negotiating trash concierge, are different ways that we commonly implement in our Smartland communities. But there's much more innovative ways that we look at it with our tech lens. A lot of our management team has a tech focus, so we really try to bring Class A amenities and 2022 and beyond amenities to today. So let's go in. Steve, if you'll touch on why we care about incremental income as an investment firm.
Yeah, it's really easy, in fact, actually. So our number one reason is increased profits for investors, right? So we go in there, and what I like to call is we throw a little bit of Emerald Lagasse, a little bit of BAM into kind of like, you know, your typical, we just throw a little bit of BAM into there. And then, you know, we take kind of these really simple, some of these simple ideas. So as Sumit mentioned, real beginner stage stuff. And then we kind of look at every property on an individual basis, and we say, hey, you know, we look at these different buckets, beginner, intermediate, and more advanced. And we're like, all right, this property can get these really simple beginner items, right? Quick to implement, real easy, effective, builds the NOI. And we'll kind of dive into a real simple number, like primary number one, like what's our simplest item. We'll kind of get into details, into the weeds with that in a little bit. But then, you know, again, it's all about, we're looking at the inefficiencies in traditional multifamily operations. And again, we're just adding a little bit of our sauce to it and kind of pushing the max on what we think that, you know, 1, the property can support, 2, what that area is maybe looking for, and 3, obviously what it's missing and what it lacks, right? And where we can get those additional efficiencies, and we'll talk about that. But then we're also lifting the quality for the residents through these amenities, which is really exciting because this changes not only the NOI, but it changes the whole experience for the residents, right? So they know our brand, they fall in love with us, so they're staying longer. And all of those things, like these are cool that we're talking about, like, hey, we pepper in these amenities, but really it's like, what is the real purpose? And it's part of a bigger picture, right? So these are super important for the NOI, but equally, these drivers also have a life cycle downstream. And that downstream life cycle is like tenant retention, and that increases NOI. So these are just those incremental NOI items, but we'll talk about again, like, it's cool that these, and then as a whole, how it looks, but really, I think it's super important to wrap your heads around the idea of like, what does this look like from a whole holistic life cycle for the property? And again, and just getting back to real quick, just like lifting the quality for the residents and bringing them to a more modern facility. It's nothing like groundbreaking. It just seems like simple logic that folks in modern times want modern amenities, right? And so there's a premium that can be captured with that. And I think a lot of folks are seeking this. We think that a lot of folks are seeking this, this value, and we're seeing it through the numbers. We live it. So, we've not only tested it, but we lived it. So the theory works.
And I think what you touched on is exactly that. We need to put in amenities in our communities in order to attract the best tenants that stay the longest, as well as adds to our net operating income. And I think those are the most important criteria that we look at, which is how do we improve the living standards for our tenants? And two, how do we overall increase the value of the property? So you hit it on the head. You really bammed it up with that one, Steve. Let's continue with our examples of some implementations so we can share with our investor community just how to think about incremental income.
Yeah. So as I said, it's part of a holistic, more of a life cycle for the entire property. But then as you take it apart into its separate boxes, or you put it in its separate little categories, individually they stand on their own, right? So like something really simple, like again, the beginner, the laundry, or the intermediate, the pet, and the advanced, we'll get into the advanced. And then we'll talk about how together they're powerful, and individually they stand on their own too. So if we want to switch to the next slide, let's jump into like this beginner, easy to implement laundry, right? So it's really, really simple. As I said, this is like super rudimentary, and I think all of us can capture it, especially like our investor community. And I think this is what really sets us apart as we try to leverage, again, our best strong suits, and that's through being entrepreneurial and thinking through these really not only rudimentary things, but then more advanced things that we'll get into. So when we get to a property with laundry income, what we'll see right at the acquisition is that we have kind of really simple scenarios. So either we have no laundry facilities at there, and we're looking at, is it a reason of just lack of management? Is there no space? Is there just a little bit of space that we can squeeze out somewhere? Can we make a little change? Can we change some closet areas or utility rooms and, bring this around? And that carries a little bit more advanced or more intermediate skill set, I think, because you have a little bit more mechanical things, just things to work through. And then scenario two, you have the laundry through like a third party provider, which is like a laundry management service. And there's a few really large nationwide ones, and there's some local based ones. So that will kind of vary from property to property. And then ultimately scenario three is just implementing your own in-house managed laundry. And before, I think when you talked about, self-implementation of this category, it was cumbersome because the third-party provider served an ideal purpose, right? You had all these machines at various properties, and now you had to be a coin collector, right? So it's kind of expensive, it's complicated, it requires administrative servicing. And so there are barriers to entry, I think, in the past. So now with modern technology, implementation of in-house laundry is seemingly much simpler, right? So a lot of these machines are pay by phone. So we don't need to have anybody on quarter collection duty, right? So that's been eliminated out of the equation. And now we can take back our laundry facilities at larger complexes, and we can turn that into a new profit center. And that's incremental NOI kind of at the beginner level, right? So you already have a laundry facility and you want to buy some new machines, take ownership of the machines, don't split your fees with the laundry management company, get 100% of your revenue. And by doing so, you can do it really easily by simply buying pay by phone machines. And there's plenty of providers, just Google it, you can find it. Again, nothing like, we're not inventing anything here. All this tech is really simple. And even the pay by phone, it works right through the cell phone. So it's a QR code. And now what's really cool about that is that, when we were first implementing the QR code prior to COVID, it was still not as native or natural to folks. But now after COVID, and like at restaurants, anywhere you go, you got the QR code scanners. So now it's even become even more native to folks, or natural. So we're seeing kind of a higher success rate with implementation of pay by phone, coinless laundry. And not only that, but we're getting direct deposit, real-time data. So we know usage, we know there's so much behind it that you don't really consider. And so, as I said, if you already have a laundry facility at the property, this is really easy. So if you want to kind of click over to the next slide, I'll give you a mathematical equation, and we won't keep
definitely. And just one other point to show is that when we're evaluating opportunities to go into invest, we look for scenario 1 and 2, because it shows us that if someone doesn't have no laundry and they're mismanaging the property or not providing those amenities, that there might be unhappy guests or an opportunity to capture incremental income. So we look at these two scenarios when we're on the acquisition side, and we see opportunities. So that's one of our big missions, is to see opportunities that others do not. And incremental income is one of those big focal points. So Steve, will you walk them through? What I love is the math behind and how it gets
valued. I know everybody wants to know the numbers. Like,
let's see what you got.
Yeah, it sounds cool, right? So our team was nice enough to put together a quick kind of a quick snapshot analysis of what we've been talking about. Steve's ranting about like pay by phone and like all these QR codes. Like, what the hell is this kid talking about? But really what we're talking about is, okay, so this incremental income, right? So let's look at the 3 scenarios we just discussed. And so there's a bunch of words at the top of the screen, and it talks about, no laundry, you're not maximizing your values. And then we also kind of broke it down more scientifically, and we figured out that a managed third-party site, so we're always using 100 units as our baseline for let's say, even for the sake of this conversation. But so we're using 100 units as our baseline model for the multifamily size. And so through a third-party provider, managed laundry, you're capturing about $4.40 per unit per month, or about $50 per year. When you take it in-house and you implement, as we have at Smartland, our own pay by phone system, now there is an upfront cost, and we'll talk about that. You're getting now $12 a month. So you're almost 3xing your revenue. So when we're talking about, like, yes, this is incremental, but this is like 3x incremental, right? And this is something really simple and rudimentary that can be implemented really quickly and without a lot of effort and without a lot of technical expertise. And you don't need, again, any additional equipment. There's some mere swap out of your existing to new that you control. And so what we're talking about here, so if you look at the first column on the screen, no laundry, it talks about the rent, then expenses, the NOI. And so if we're evaluating the property on today's market, we're talking about like a 5 cap, let's say Midwest, and then, northern, southeastern segment of the country. So if we're still talking about a 5 cap, this building would be worth $12 million.
So Steve, just to walk them through that, you're taking 100 units at an average rent of $1,000 a month, and you're multiplying that by 12 to get their annual rental income, right? So that gets you to the 1.2 million rental income. Then we took that through an operating expense of average 50%. That gives us a net operating income. And then we took the laundry income, which really doesn't have any cost to it. And we said that our value of this property with no laundry is 12 million. Is that right?
Yes, that's correct.
Okay.
Yes,
okay.
Thank you. Thanks. I totally did not line that up as well. You rock. And so if we take the managed, I was just excited to get to the numbers.
Yeah.
So if you take the managed laundry scenario at the $4 per unit that you're getting from your managed laundry servicer, the new value based on the laundry income that you're getting is 12.1 million, right? So now your building is no longer 12 million, but it's 12.1 million. And if we take the same logic, but we implement our own in-house facilities that we manage through a pay by phone app, right? Now we've increased the building value to 12.288 million. And how did we do that? So we almost 3x the laundry income. And at that 5 cap value, that's how much more value you're gaining in the property. So as I said earlier, a lot of these incremental things stand on their own merit. So in this case, so I also mentioned that we would discuss what we spent by implementing in a building, let's say 100 units like this. So the initial expenditure was $20,000 for the new machines. And that is almost nearly in a 1-year payback. So it's about 18-month payback. And so anything that you're looking to do, like a capital expenditure, you're looking to get your money back within 3 to 5, and that's a good investment in that case. And this one really stands out really well. And it also produces, almost a 10x return on your capital expenditure investment. So this one's awesome. I love the laundry income one. So let's move on to the next one.
Absolutely. Let's do it. So intermediate, now we have a stage of implementation that just takes a little bit more sophistication to deploy. And I mean, who in your household or families loves pets? Because I'll tell you, I'm the biggest dog guy. I've got 4 in the family, and I know that I would not move anywhere that didn't allow me to have my pets.
Well, and to your point, we know avma.org reports 57% of households own a pet, right? So statistically, almost 6 out of 10 people or households own a pet, right? So it only makes sense, at least from our seat, for our investors, is to explore this incremental option, right? Incremental NOI option. And so on behalf of our investors, us, always being this entrepreneurial spirit type of team, as I said, each one of these stand alone, but collectively it's much more powerful. So taking a little bit of this statistic, implementing a pet-friendly community is huge, right? So we look at it from, okay, so now if we take the same example, 100 units, and Sumit did such a good job walking through on the last slide.
Yeah,
100 units. I got this one.
Okay,
units.
let's see what you got.
I'm gonna try to match you. Okay. Okay, so we got 100 units at $1,000 a month at 12 months. So we have $1.2 million in annual rent. How am I doing?
You're doing very, very good. You're on par.
All right. So in our initial example, we got no pets. Okay. No pets. That means we got no pet rent income coming. Okay. And so our total income stayed the same. Our expenses are the same. And our NOI is $600,000. So our value on this property is $12 million at a 5 cap. Now we take the same thing, but we implement the pet-friendly community. Okay. Also,
what does that mean, a pet-friendly community?
Yeah, excellent question. So this is an intermediate implementation. So it's a little bit more complicated because it has a little bit more CapEx behind it. And what I mean by that is that, so we're putting in new resilient floors throughout all the units, right? So we're making the whole facility a little bit more pet-friendly. It's not just like we have a few poop bag stations for your pet. So it's a little bit more advanced, as I mentioned. And so, so making the facility more pet-friendly, number one. Number two, as part of our again CapEx allocation to renos. And then number two, putting in like a true pet park, right? Like a fenced in pet park community with some benches, some signage, like a facility that can accommodate both small and large dogs. And so what that does, and we just talked about this, and Sumit, we were kind of just kicking it back and forth. And what we're saying is that, it's not only about just making it pet friendly and saying, hey, we're going to charge you more, but we have to attract the people that want to be there. So we also have to make it attractive for their pets. So putting in the little pet toys, within the pet park. And so this also enhances our marketing. We're getting a capture of better clients and that are willing to pay a little bit more. And so every one of these pet friendly clients is paying $35 a month more on their rent and a $350 one-time charge. And so in turn, so if we're looking at like 30% of saturation on 100 units, in turn, that's about $23,000 in additional income. There's a little bit of expenses like, some cleanup, bags, just mediocre stuff. So we allocate about 10% to that. But once we once we deduct for that, our additional NOI is $20,000 a year. And then when we're talking about, well, what's it worth in value, right? So you guys did this investment, you enhanced the units, and you built a pet park. So what is, you spent, I don't know, $30,000, $40,000 doing it. What did that return? Well, almost 10x, $415,000 in value, just at 30% saturation. So anything above that, if you can get more than 30 residents with pets, you're even further along. And so now you're talking about, if you take the first one and this one, you're talking almost $700,000 in added value by just 2 items, right? And we have a hodgepodge list, like, we have a dozen items or 18 items, a dozen and a half items. And so we're just talking about 2 items. So this is before we've increased rents. This is just simply taking a facility that doesn't have these things or has them in a mediocre way and just improving them to a more modern facility. So this is kind of our investor-focused, investor-centric brain that we put on and try to think about, not only the improvement in living amenities and conditions for residents, what it's going to take to attract them, what it's going to take to retain them, but also in the interim, hey, can we gain a little bit of additional revenue for our investors and really make this extra successful for them?
Super good. I think you described it a lot, but I think one of the other things that we touch on is having people with pets, they stay longer at our Smartland communities, and that adds a lot of value. But I think even just if we just put in pet income, it takes what we would normally get as a 12-month lease and almost equates to a 13 or 14-month lease just with that additional income. So we find it, one, from a distinguishing factor. We've done this at many of our things. Even a couple of years ago, we had one of the largest pet parks in Cleveland, and that attracted
in the county,
eyeballs.
In our whole metropolitan county. It was incredible.
Right? So it differentiates you if those standards are not there. So if you're a pet parent, where do you want to stay? Do you want to stay to an investment firm, an operator that caters to your needs? Absolutely. Are you going to rent for a longer time? Probably. And then is your stay experience going to be better? Absolutely. And so those are all reasons when you add amenities, how it actually drives value. So I think you did a really rock star job at explaining that. Will you go through what I think is really exciting and how we think about how do we take these existing solutions and take our technology focus and implement a tech-centered approach to one of the highest needs that we find that most households or apartment renters want.
Yeah, definitely. So, and we'll close out with this today. And I think we're running close on time anyways. We don't want to hold you guys up. So this is more of that advanced implementation. That third bucket, third tier, takes a little bit more capital expenditure, a little bit more, it takes a little bit more administrative tactics to implement. And so we call this more of an advanced implementation. It's not quick. It's not as fast as the previous ones. It doesn't always fit in every property, but we try to fit it in that bucket. And, there's a threshold and it gets a little bit more advanced, as I said. But getting back to that. So when you take a traditional multifamily, a lot of times you'll see right in the income ledger, one of the things is cable internet revenue income. And you're like, whoa, as an operator, you're like, man, where did this money come from? Free money. Somebody's like giving me all this money just to allow them to be in my building and my residents to buy internet from them. That's cool. Like, I don't have to do anything. I don't have to rack my brain. I'm just getting paid. Well, we're like, whoa, wait a second. If we're getting paid, we're probably just getting paid like just a fraction, right? So let's again put on our entrepreneurial, like techie brains and see what we can do, right? So hotels do this every day. Like, why isn't this more of an implementation in multifamily operations? That was like our number one question, right?
So you're, Steve, you're saying that like traditionally you're in an apartment community and you're just approached by a cable provider for internet and they just offer you to resell their services, but at the cost that they're telling you to do, correct? At a retail price.
Yeah, we're not even selling it. They're the ones selling it. And then they're just giving us a rebate because they're selling it to our community.
So a very small little rebate, but then this advanced one, which we have a technology team on our internally, but we could also hire a local third party that could do this type of infrastructure build.
Yeah, yes,
smaller in size.
Yeah,
so
certainly.
So go ahead and walk them through it.
So you're getting this like small mediocre check, $250, maybe $300 every month, every other month across 100 units, right? And you're like, whoa, wait a second. So what we did is we implemented our own internet hardware and infrastructure system. And so everybody's got to buy internet today. Maybe not TV, but definitely I would say internet. I think that we could all agree to that. And I think all of our investors would agree with that. And that's what we're using today as a medium to communicate. So we implement our own hardware and we sell our own Smartland internet. So what we actually have figured out is that we can wholesale purchase the fiber line from the provider that's going into the building for a fraction of the price, for a few $100 a month, and sell internet directly to our residents for the full. We have 3 packages, $19.95, I think $34.95 and $49.95. And it's just a Wi-Fi signal. It's just like you would be at a hotel. You have your own private login and you could stream on it and it's just as fast. And so we're cutting out the middleman in this case, and we're becoming the sole provider. And so rather than, $250 a month or every other month, we've been able to now grow that to $13.50 a month. And that's if we have a 45% tenant consumption rate. So if we can increase our base of tenants using our internet, we can even increase further. And so $13.50 a month increase just from internet sales. And again, limited kind of support requirement. Is just a Wi-Fi and it's just a password. We can turn it on, we can turn it off. It goes right as part of their billing, right into their tenant portal. There's no additional administrative complexities on our side. So it's really cool. Again, it's a little bit more advanced, but it's really cool. And so we're capturing another $16,000 a year. And if we're looking at that 5 cap scenario, that's another $300,000 in property value. So we just gave you 3 scenarios, right? A beginner, intermediate, and advanced. And we just increased our property value by $1 million.
Almost $1 million.
$1 million. And so I think, and I think our team thinks, and we think that this is so exciting. And that's why incremental NOI is so important, right?
It's one of the things that you guys all have to think about when you're looking at how an investment firm invests and what line items they look at. These are just 3 drivers, and there's much more to it. One of the other reasons we bring it in-house is if you've ever been living in an apartment or your internet goes down and you have to wait on a third party to go in and solve it, that's a huge issue. And the tenants don't blame the cable provider, they blame us as the managers of their community. So we take that in-house so we can solve issues as quickly as anything goes down. But you can see that all these little examples are different levels that if you're investing on your own or with a firm, how we think about it. We also take technology, even more advanced strategies. We kept these very simple and relatable because they're everyday items that people can relate to. But we take it up a notch. We look at Bluetooth technology from a lock perspective. We look at Alexas in every unit. We really try to add smart amenities because we know that it attracts the best class of tenants that are less likely to default on payment. They're likely to pay a higher rent. And so focusing on how to attract the highest end of tenants also de-risks our investments. So let's go through and just tell them a little about what I'm going to share is just if you want more of our education, we do these with Verivest on an ongoing basis. We also have our own newsletter that we push out with a lot of education. Our contact info is right there below, and we're so thankful that Verivest allowed us to be here and really educate their investor community. We're happy that our investor community got to participate. And what I want to do is just show you how you subscribe. So you've got Steve's contact on the left and mine on the right. And then if you want to go to our website to subscribe to our newsletter, what you'll do is you'll go to www.smartland.com and you can either click offerings and add your information here so that we can contact you and continue to stay in touch, or you can scroll to the bottom of the website and subscribe it, stay updated. We're really excited to be here. We really try to take a tech-centered approach and be very forward-thinking, be very innovative in the way that we think about things. And if you guys have any creative net operating income drivers that you're thinking about or have learned about, we'd love to hear from you. We're constantly learning. We're constantly learning from others. We're constantly pushing the envelope. And we're here to be partners with Verivest, our investor community, and continue to drive increases in property value. So thank you, Brittany. Thanks, Steve, for joining us. We really got a ton of value from your operational expertise and just diving into those simple examples.
Yeah, and I was able to throw some of
enough.
our BAM in there today. I'm so
that
excited.
was bigger than Emerald.
Oh, it looks like there's a question here. Are vending machines another option?
Absolutely. So vending is, so you could take those through the different tiers, which is you can either have no vending, so your amenities are someone doesn't have vending. You could also do a third party that puts their own vending, or what we're seeing even better now is micro markets. So not enclosed vending, but they're going up to stations and it's almost scanless. If you've seen
you
Amazon
shared
shopping,
it with them.
That's the more innovative way of thinking about it.
You shared it with them.
Yeah,
shared it. So actually, we've taken that idea even a little bit further. And so one of the things that we've been thinking about is vending, like everything that Sumit just talked about, but the sauce that we would add to it that we've been evaluating is, yes, the cashless mini market type of micro thing. However, the one thing that's lacking is that on some properties you just don't have the space for it. So we're looking at shipping containers as a viable solution to place, like within, if the lot is big enough, just to place it on site and just have a cashless kind of micro market essentially within the facility. So we are looking at really innovative ways. And as technology allows more and more of this, whether it's Amazon or whoever is offering these, like we're always in this exploration mode. And so if you talk to our CEO, he's that guy that's always, what is that, early adopter stage, right? So he always makes fun of me because he thinks that I'm like further along on that adoption curve. And he's like right at that pioneering stage. And so I would have to say that I have to give him a lot of kudos that he is truly a pioneer at that early adoption stage. And he's always tinkering with the latest and greatest kind of techie stuff. And that's both entrepreneurial, but kind of just inherent background. And so implementation of those kind of fundamentals into our process is where this incremental NOI conversation keeps stemming from. And so again, it's a whole list.
And I would encourage the others, as you think about it, if you're going to do vending income and you're just going to put a vending machine in, how could you increase the appeal of that amenity? And that's why micro markets or doing it in-house actually adds an appearance of a more luxury experience, which does appeal to tenants. And that's one of the reasons we try to be a pioneer versus just going with the standard. We believe if you're just meeting existing standards, you're not pushing the limits, and that's what really captures rent premiums and incremental revenue. Any other questions, Brittany?
Oh, well, I don't have any questions. I would like to open the floor to questions. I know we've had a few. There was one that was in the Q&A about the 18 items that Stephen mentioned, and he will be sharing those, Stephen, in a future webinar. Is that what you?
Yeah. We want to keep the excitement alive for you guys.
We didn't want to hit them with all 18 on the first.
There's a lot. It's a lot to go through, but we do have a running list. Yes.
So awesome. I hope that gave you some ideas on how you'd have kind of incremental NOI at your communities, right, Brittany? So did you get some big takeaways from today's?
I got some big takeaways.
Okay.
This is great. Do you find a higher turnover cost with the increased pet allowance?
Yeah, so when you're saying increased pet allowance, you're saying the security deposit that we take. Is that what they're asking for clarification?
No, I think what they mean is is it more expensive to turn the unit after you've had a resident with a pet living in the unit? And if I can take that, sure. So we kind of pre-plan some of this. So we try to implement resilient product lines, advance of kind of the implementation of being a pet friendly community. So as I said, there's much more to it. So before we walk in and just say, hey, we're pet friendly and now we accept pets, we typically we're acquiring the property. We're already planning a pretty robust renovation. And within that renovation, we're implementing these strategies that are, that mitigate some of these exposures. So once we say, yes, we will accept pets. We're pretty prepared, and we're not seeing. And so to your point, we haven't seen a higher cost of the turn because of that.
Yeah, and I think just to dive into that. So, for example, we put a LVT style in some of our units, and instead of, let's say, existing units in Ohio where it may be vintage and it might have carpet, we don't want to be replacing carpet every time a tenant turns, and so we want to implement scratchless type LVT, linoleum vinyl tile, and just different processes that mitigate any issues. But
right away from day one.
And we're calculating that into our revenue. We know that we want our outgoing expense to turn a unit. We want the revenue that's coming from that additional pen income to greatly outweigh it. So we do find in the way that we run our efficiencies in controlling the turnover, that pet allowance for turn, we're definitely generating a significant premium over that.
Awesome. Good question. Thank you guys for all of your information. It was truly valuable, and I know lots of folks got value out of this presentation. So again, thank you for joining us this evening, and you guys have a good afternoon, evening, or wherever you're tuning in from. I know we've got some Miami, we've got some Ohio, so
come visit us in either city. We'll show you the best places to eat, or come connect. We're happy to connect with everyone. So thank you again, Brittany.
Awesome. Take care.